Okay, good morning, everyone. Welcome to the Financial Juice live morning briefing. I'm your host, Tony. So let's start off today's bit of news before we look at the charts. Let's have a look at this headline here. So from CNN article, a global deal to slash oil production is at risk after Mexico objects. So Mexico has declined to support the agreement, and meeting participants said that they acknowledged in a statement that the final agreement is conditional on the country's consent. So yesterday we had some issues with Mexico saying that they wouldn't agree to the 400,000 cut per day by themselves. They were looking to cut 100,000 barrels a day. Now this caused a bit of a stir in the oil markets. If we just have a look at the charts, bring up WTI crude oil. Looking here, here's what we see. So from yesterday, we did see the initial spike in WTI crude oil when we had that breaking bit of news that Russia and Saudi Arabia had actually come together and agreed to a production cut. And then after that, when we got news coming out from the non-OPEC member Mexico, who have been working as part of the OPEC Plus group, who have been working with OPEC since 2016, their comments had some negative effects on the oil markets, and that's it's just been, not only are we seeing the negative effect of Mexico saying that they wouldn't agree to a 400,000 barrel per day cut, and are looking for a 100,000 barrel per day cut from their side, but we're also waiting for the G20 meeting at 8 a.m. Eastern time this morning. So that's what we're currently waiting for. Just to see, first of all, do we get any more comments from the USA, and will they be aggressive in saying that they won't cut oil production and they will leave it to the Saudis and Russians and other OPEC and non-OPEC members to cut oil production, or will they be more inclined to say, okay, fine, if everyone else is deciding to cut their oil production, then we will also do that on our side as well. So that leads us to our next article. If I just bring that up on here for you. So from Al Arabiya article says that the US will organically cut oil production at least 4 million barrels per day. That's according to Sitton, the Texas Railroad Commissioner, or the Texas regulator. Now, what it says here, Sitton added that if the cuts aren't agreed upon, then global storage for crude will likely fill within 2 months, which could cause further declines in prices. Now, you have OPEC that have sorted their side out. As I said, we're now looking to the non-OPEC members, the G20 energy ministers, to take a unilateral bit of action to curtail the amount of oil that's being produced. So also to add from this article, so IEA's head Birol, he echoed the same sentiment today as well, saying that a deep cut would not prevent a huge increase in global crude inventories over the second quarter. So that's quite a negative thing, that what OPEC is doing from their point of view is not going to be enough. That there needs to be unilateral action from other countries, including Mexico and the USA, to cut output production. Now, just to add to this, the Commission is currently weighing for the first time in nearly 50 years whether Texas should curb crude production, a move that would have enormous business and political impact. We had some headlines earlier in the week, or on the Friday, where Sitton, the Texas regulator, said that the USA would look to cut possibly 400,000 barrels a day in just Texas alone. Now, that would be quite a positive thing, but that's not been agreed upon. There's been no added comment from Sitton whether or not Texas would cut 400,000 barrels a day. If we just think about the current sentiment as well between the US and OPEC, Trump saying himself that he would slap on oil tariffs if the Russians, if the Saudis and other OPEC nations don't come to an agreement for a cut. Now, that doesn't seem too likely, considering how OPEC have taken that action. And US Energy Secretary Brulette would also join in the G20 meeting of energy ministers this morning as well. So it's more presenting more of a positive sign here from the US's side. But again, from this comment from Sitton saying that the US will organically cut oil production at least 4 million barrels per day, it's again hinting that the US isn't going to take any action or is looking to take any sort of action to curtail their own oil production. They say that it's naturally going to happen. Just getting some headlines coming out now. The G20 conference will be held to participate in reduction of oil production with OPEC and non-OPEC. Korea has announced that the day of Abdulaziz Salman and Trump phone call have told each other that they would look to work together. So it's some positive signs here, just picking up from a headline that's come out here. Also, some earlier headlines from the day today as well. You had Putin, according to TASS, the Russian news agency, saying that he plans on new talks on oil prices after a call with Trump and Saudi leadership. We'll go into that a little bit further. So we take a look at another article. Okay. Now, from the Financial Times, so as I said, OPEC and Russia reached a deal to cut oil production by 10 million barrels per day. An OPEC official said that talks to ratify the deal to cut 10 million barrels a day of production, or roughly 10% of global supply, would continue at the meeting of G20 energy ministers today. Don't forget, the current oil production that we have globally is at 100 million barrels per day, and the demand dropped from 100 million barrels to around 90 million barrels a day. So there's that oil glut that's missing there, that is there at the moment. Now, you're going to, we spoke about this yesterday, but as oil demand drops off significantly, which it has, and also Birol saying that we're going to fill up our oil supplies by the second quarter. This is, well, I mean, you would look to Saudi Arabia and other OPEC nations and non-OPEC nations to continue these cuts, not only from OPEC side through to 2022, but you're also looking for non-OPEC nations to follow suit as well. If you don't get that of non-OPEC nations following suit with OPEC and cutting through till 2022, or maybe even longer, then you're going to see oil prices significantly see a depression in prices. Initially, we would expect oil prices to move back towards the upside. That's a given there. But if non-OPEC nations and G20 energy ministers don't take enough action, then you're going to see a continuation of the depreciation in crude oil. If we just look on a higher time frame, see where we are level-wise, here we go. So we just bring it to a weekly. I've shown this before, but again, I still think it's necessary for us to understand where we sit at the moment compared to previous times. Now, if we, at this time, WTI crude oil is continuing, not really showing any signs of moving back towards the upside or significant strength. And we are reaching our 2001 lows back in around October, November. So if you're trading the markets at the moment, what we're looking at is that this depreciation in price is going to last for quite a bit of time. Naturally, even before any sort of OPEC cuts or non-OPEC cuts happen. So this is what we're expecting. But what I'm expecting is oil prices to continue to move towards the downside. Potentially, now this is a really bad worst case scenario. we could get to single digits. And that's something that's been also echoed by OPEC members as well, particularly Saudi Arabia, that it could get to could get crude oil prices getting to single digits. So WTI crude oil, you've got your 2001 lows there at around $16 a barrel. Then you have your next bit of, your last bit of support here at the moment at around $9 a barrel. Again, that's a worst case scenario where oil continues to, if oil isn't curtailed or production isn't curtailed, that's one scenario that we have, and you can't put that out of your mind. You can see it clearly there. So just keep that in the back of your mind as to what we could potentially see. Now, going back to the article from the Financial Times, OPEC, they called on USA, Canada, and among other countries to cut another 5 million barrels a day when G20 energy ministers are to hold their meeting today. If the US is saying that they're going to organically cut oil production by at least 4 million barrels a day, does it really mean that they need to cut any further? Again, from the US's point of view, they would say at this time that they wouldn't need to, that they would have already met that target in what they've said, given that figure. But if you've got Birol saying that it's going to be an oil glut, and we're going to fill our oil reserves quickly, then you would look for potential for positive actions by not only the US and Canada, but also other non-OPEC nations. If we go to a Guardian article, so our next article here. So from the Guardian, now they say that OPEC and Russia and other oil producers make draft deal to cut output. Trump, who has said that the US output was already falling due to low prices, warned Riyadh that it could face tariffs on its oil if it did not cut enough to help the US oil industry, whose higher costs have left it struggling with low prices. So I just had a read of an oilprice.com article a couple of days ago, and what it was saying is that US shale production, it costs quite a bit to produce oil within the US. The only issue here is that from the article it says in the short term, US shale industry would be okay. It wouldn't be that bad. They would struggle a little bit, but the shale industry wouldn't be that heavily impacted yet. You've got to remember that the US is looking to buy 77 million barrels of US shale to keep those shale companies afloat. But after that, the more time goes on and the more we experience these lower prices, the shale industry within the US, from that article, they say that is going to have a significant negative impact. Now, the reason why it would have a significant negative impact is because, of course, if you're producing oil if other countries are producing oil really low prices and lowballing you as a nation, then that's, of course, going to have a negative effect in the longer term. You'd potentially see the US shale industry being crippled significantly by the Saudis and Russians, which is what some economists and analysts have been saying, that the Saudis are out to cripple the US shale industry. That's just a bit of rumor there, but by the looks of it, that's what Trump's hinting at, is that if Russia and Saudi Arabia and OPEC nations don't take that unilateral action or significant unilateral action, then that's what's going to happen. But today, it seems like things have kind of been put in the balance with that headline from Putin saying that he's had a call with Trump and Saudi leadership to kind of keep things calm and on the low for now. Also, just to add, White House aide said Trump had a call with Putin and Salman after the US official said the move by OPEC Plus sent an important signal to the market. Again, positive comments coming from here. Not, as I said, we're not seeing that movement from WTI crude oil as of yet. They're waiting. Traders are waiting for action and continuity by OPEC and non-OPEC to see a continuation in cuts of oil production. It can't just be a one thing, one bam wham. There you go. We've cut oil for a couple of months. No, you've got to see a continuation of this output cut to level off to get to the demand level that we currently sit at. Just finally, then, just to kind of finish things off a little bit for the day. From a BBC article, Raab, the UK foreign minister, urges the UK public not to ruin the lockdown progress. So the UK government has suggested that the peak of the epidemic may not arrive before next week. So what in the UK, we're 3 weeks into our lockdown phase at the moment, and we are seeing numbers. We're not seeing numbers peel off as of yet. They are saying that they are expecting today's or tomorrow's figures to be the highest on record within the UK, of over 900 deaths from coronavirus or COVID-19. Again, as expected, you would see the UK stay in lockdown for at least. Now, my prediction is up until late May, or at the very end of May. So me and Amar were having a discussion saying, oh, when do you think the lockdown will be taken down? I said 28th of May. He said a week earlier. But that's if that's the thinking of it in reality. If this lockdown is having a positive effect on first of all, the amount of coronavirus cases being contracted and the mortality rate as well, then it's a positive sign. Just getting some more headlines out from here. OPEC Plus still is not convinced Mexico supports the cut deal, according to delegates. As I said again, the Mexicans are not agreeing or not convincing OPEC that they would agree to the cuts. Which is again, now Mexico, fine, it's not a significant producer of oil, but what does it mean for other non-OPEC nations? And what does it mean for the G20 meeting today? Will other G20 energy ministers look to say, right, okay, the sentiment is that Russia and Saudi Arabia have done enough. If that comes out, that sort of sentiment, then the markets are going to continue to see some more turmoil. But this is the threat that we have. If Mexico could convince other nations that, look, Russia and Saudi Arabia have done enough, and we don't need to add any more cuts ourselves, or as much of a oil production cut ourselves. Again, presenting a negative state sentiment. But again, G20 energy ministers on the flip side could say, all right, you've cut, so we'll also cut at around the 5 million barrel per day cut that you're looking for, or potentially even more. Okay, that is your morning briefing there. We'll just have a quick look at the charts just to see where we sit at the moment. So the dollar continuing to depreciate in value as off the back of the Fed saying that they would supply $600 billion or actually provide $2.3 trillion to the economy, and also buy up $600 billion of corporate debt. So you saw the US futures move towards the upside quite significantly from that comment there, and the dollar move towards the downside with significant weakening. So as we can see here, this is where we got the so if we go back a little bit, So at around, if we go back to around the time, so around 8 a.m. Eastern time, we got that bit of news from the Fed, and this is where we saw that movement towards the downside. Now, it is kind of peeling off at the moment. Sentiment trading, we can see a little bit of stabilization here on the Dixie at the moment. Okay, thank you very much for listening. Stay safe. Enjoy Good Friday today as well. We'll still be here as normal. Okay, thank you very much.